Hi, hi. Please keep your cameras on, everyone. Let's start a good session on the topics. Had we started internal controls yesterday, or we just did 315? Oh, no, no, no. We were doing even the components of internal controls, right? We did that. Guys, you're not saying anything.
Recording in progress.
Are you able to hear me, guys? I'm asking what are the topics we have completed yesterday? From where should we start today?
We should do essay 320 today.
Essay 320 we wanted to do. Are beautiful. I love that standard. There are standards in your life where which makes your life easy, and that is one of the standard, that is SA 320. Once you know that one, like some misstatement is not material, why should we care so much, right? So first of all, whenever you find a misstatement in the financial statement, the first question should be, is it material? But if it is not, you do not spend your life over there. If it is material, then you go and apply for the audit procedure on that, right? And or you consider its impact on the financial statement, or in your audit report. But the question is, how do you determine what is material and what is not material? For that, you have to come to SA 320. Pooja, are you going to turn on your screen? I think you have, no? I can see Nirai.
Yes, ma'am, just a second.
Okay, okay, okay. Take your time. Can you tell me the page number from where 320 questions are starting? Components of internal control we did. There's this. Question page number 3.17. We have many questions on SA 320, right? Question number 42. CA Raja is auditor of Build Well Forging Private Limited, having a revenue of 25 CR. The company has been sanctioned a term loan of 50 lakhs from a bank. However, at the end of the year, only 1 lakh was availed due to delay in procurement of asset. So, do you understand the difference between sanction and availment? If I am the bank and you all need loan, right? If I am the bank and you need loan, you will come to me and ask, give me 10 crores, 10 crore rupees loan. Okay? I will check your credit worthiness and I'm like, no, 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 10 crore, giving 10 crore loan will be too much. I will give you a sanction limit of 5 crore rupees. During the year, based on this work, 5 crore rupees, whenever you need the money, you withdraw that amount. So you suppose till 31st of March, you have only drawn 10 lakh rupees. So 4 crores and 90 lakh is still in your account sanction limit. You can still withdraw in the next year. That is not a problem. Are you understanding? So in this case, what happened till the year end? Out of 50 lakhs sanction limit, only how much they have availed? The company has availed only 1 lakh. Why? Because the reason why they wanted to avail the loan was purchase of asset, but there was a delay in that process. Now, financial statement of the company do not disclose the nature of security against which the loan has been taken. The entity in their financial statement, they did not disclose, like, see, whenever you, for example, when you came to me and asked for 10 crores loan, I sanctioned you 5 crores loan, I must have asked you, ki, Baba, give me something in security. It can be your inventory, it can be your data, it can be your any asset. But in this case, they did not disclose what is the security taken. Schedule 3 of the Companies Act required disclosure in this respect, discuss whether non-disclosure of nature of security is material for the auditor. What is your layman answer in this case? I don't want to know the answer of ICI. I just want to know what will be your layman answer. Think. Think they have given the act name over there. See that they have given a schedule number over there. And then relate it to your knowledge, what you have from SA 320 before this class.
It is material.
On what basis you are saying it is material?
There is a statutory requirement.
Exactly. So when it comes to materiality, it is not always based on amount. Or it is not always that this is a small disclosure, this is a big disclosure requirement that they have been. No, 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 no. If something is a statutory requirement, if it is a disclosure requirement as per Schedule 3 of the Companies Act, it is a statute that requires you to disclose the nature of security that you have given for taking the loan. Yes. So if it is the requirement of the statute, it will always going to be material, irrespective of the amount. Yes. Guys, are you able to logically understand what we have studied just now?
Yes, ma'am.
Okay. Now this is a question where they have given you ICI has given you only one line answer, materiality. No, but in which topic ICI has covered that in your books SA 320, guys, this materiality level for a particular class of transaction?
Under risk assessment and internal controls chapter.
No, 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 that is not. Under 320 only, where they have given this that material, you don't have to go by material, amount only. There is a specific topic which says that, right? Under the second topic, materiality in planning and performing the audit, right? Okay, so suppose, see, I say I have given you a very simple answer, but suppose if this, something like this come to your exam, right? So, सबसे पहले um, you will have to explain what is materiality. So, when you write this answer, you first explain what is materiality. As per SA 320, materiality in planning and performing the audit a misstatement, including in bracket, you write including any omission, are considered to be material if they could influence the what decision? Economic decision of users which are taken on the basis of financial statement. Any misstatement in the financial statement is considered to be material if they could influence the economic decisions of an user which are taken on the basis of financial statement. Then you will tell the exception. Materiality is not always a matter of relative size. So basically it does not always related to the size or the amount of that misstatement. Judgments about materiality are made in light of surrounding circumstances. If there is any statutory requirement of disclosure, if there is any statutory requirement of disclosure, it is said to be material irrespective of value of amount. Example, disclosures as per Division 1 of Schedule 3 of Companies Act 2013. Then you will write in one line in the given case, not in one line, like take 2 to 3 lines in the exam hall and right now you don't have to write, but give a placeholder. In the given case, whatever happened, you will write. And then how will you conclude? You will conclude by saying disclosure of nature of security against which loan has been taken is the requirement of statute. Hence, irrespective of the amount of loan availed by company, auditor will consider its omission as material. Just let me know if you want me to repeat any part because of my handwriting. Now, another question. One of the team members of Auditor of Highly Capable Limited was of the view that the materiality and audit risk are only considered at planning stage of the audit. Comment as an auditor. Can you tell me, do you really consider materiality only at the audit planning stage or audit risk you at the audit planning stage? You have already studied what is audit risk, right? Inherent risk, control risk, detection risk. Do you really think that you are going to consider only that at the planning stage? Throughout the audit, whatever circumstances you are going to get, you are not going to consider that. Is it going to happen? The answer is no, right? Throughout, see, in the course of audit, you have to keep on revising your materiality. Not keep on, if there is any circumstances which actually insist you, which actually tells you, no, your initially made materiality or you initially done risk assessment is not sufficient, you have to revise it based on the actual circumstances. You will have to revise it. Yes? So materiality and risk assessment both are considered throughout the audit. How do you write this, guys? There is a concept of audit risk and materiality in your books in itself. Shall I write? Now, how ICI gives this answer? They always start with objective of auditor as per SA 200. This is what they have not written. That what this is the objective of the auditor as per SA 200. Like even if they write or not, you write it like this. Objective of an auditor as per SA 200 is to obtain reasonable assurance. What reasonable assurance? That financial statement as a whole are free from material misstatement, whether due to fraud or error. Yes, thereby enabling the auditor to express an opinion on whether financial statement as a whole are prepared in all material respect as per AFRF. Now, auditor obtains reasonable assurance by obtaining sufficient and appropriate audit evidence to reduce the audit risk at acceptably low level Now, you will explain what is audit risk and you will explain what is materiality. Yesterday I have explained you what is audit risk, and you also have to write the definition of what is materiality. What is audit risk? Risk that auditor expresses inappropriate opinion when financial statements are materially misstated. What is materiality? A misstatement is considered material when it is expected to influence economic decision of users of financial statement. So both materiality and audit risk are considered throughout the audit. At 3 stages. First, when identifying and assessing risk of material misstatement. Second, when determining NTE of audit procedure. Third, when evaluating effect of misstatement. Can you tell me about in which standard you evaluate the effect of misstatement? Guys, why are you not speaking today? You don't know this answer? You have this standard in your syllabus, right? Chapter 7. Completion and review. Essay 450. Evaluation of misstatement identified during the audit. So when in essay 450 you are evaluating misstatement, at that point of time you will have to consider whether that misstatement is material, not material. In essay 330, when you're determining the nature, time, and extent of further audit procedure, then also you have to consider materiality. In essay 315, when you are identifying and assessing the risk of material misstatement, then also you need to know whether it is material or not, right? Go, don't give me shocks, guys. We have exams in few days. Done? Are you done, guys? Shall we move to the next question? There are certain vague questions that is also I'm going to cover in the class so that you know if something like this comes in the exam, you know how to answer it. This is RTP November 21 question. What could be considered material in all situation cannot be defined precisely, and an amount or transaction material in one situation may not be material in another. This is a very specific topic from SS 320, which is your concept of materiality. First of all, you cannot determine materiality to be very precise for all the situations, that this situation will be material in all the cases. No. Whether an amount is material in one situation, not necessarily it will be material in another situation. Now imagine you are doing the audit of my business, my coaching business, or you are doing the audit of PW's, physics wala, in the other big institution. Do you really think the materiality is going to remain same in both the business? Obviously, no, because the size of the entity and the nature of their operations also going to affect it, right? So accordingly, the value will change, but which you will consider as material. How do you write this answer? As per essay 320, you will write full name of it. Auditor is required to consider materiality and its relationship with audit risk while conducting an audit. When conducting, when planning the audit, auditor, when planning the audit, auditor considers what would make the financial information materially misstated. It may be noted that auditors' assessment of materiality and audit risk may be different at the time of planning the audit and at the time of evaluating the misstatement. At planning, auditor needs to consider materiality for financial statement as a whole, whereas he needs to consider materiality at assertion level of COT. I'm writing short form, but I want you to write this in full form. Can you please identify what these short forms belong to? Assertion level of COT, AB, and disclosures.
Class of transaction, account balance.
Class of transaction, account balance, and disclosures. Therefore, what could be material for all situations can not be defined precisely, and an amount or transaction which is material in one situation may not be material in other. Example, rupees 5,000 may be material for a small entity, but even 5 lakh may not be material for large entity. If you think about the large corporations, like, who are earning in 1,000 crores and all revenue, like Reliance for 500 crores turnover, for them something like this 1 crore materiality is also very small. They keep their materiality at 5 crores or so, the company which makes the turnover of 500 crore. But for for a small company, they may not even have like turnover of that kind of 5 crore rupees or 10 crores rupees in a year, right? So it will differentiate between as compared to the as you relate it to the size of the entity. Now, will you be able to answer question number 46 by yourself? Ronan, can you please read this question?
While conducting the audit of Smart TV Limited, engagement team of HTR and Company has considered materiality and audit risk throughout the audit. Discuss explaining the meaning of audit risk.
You have already covered this in the question we have done before, the question number 43. Right? Same question can be asked in many manners. Do you either you consider both at planning stage or you consider throughout the audit? The answer will remain same. So in question number 46, you can give the reference of, refer question number 43. Now, in my audit, I want to determine materiality according to myself. In your client, you want to determine materiality as per you. So ICI is not going to tell you ki, what should be the materiality amount. Determination of materiality is a matter of professional judgment. And it is affected by your perception, means auditor perception of the financial information need of the users of financial statement. In this context, explain the auditor's assumption about users of financial statement. What does it mean? When you are making whether this amount in the financial statement is material or not, you just don't decide it yourself. You need to consider it what is users need. Which users are we talking about? The people who study financial statement, the people who is going to refer the financial statement of the company. So user means users of financial statement. So if you think that a particular misstatement or omission is going to affect the economic decisions of the users of financial statement, it becomes material. If it is not, then it is not material. Are we clear, guys? But the question is, how do you know? How do you know whether the user of financial statements are the commerce students or science student? How do you assume that? Who are the users of financial statement? Government, bank, creditors, debtors of the company, maybe employees of the company, shareholders and investors of the company, right? How do you know that whether they are science student and commerce student? How do they know how to calculate the liabilities and assets? You don't know that. And can you hold the collar of each of these guys and ask them like, do you understand how the financial statement look? Do you know what is P&L? Do you know how to calculate the, is it a possibility? Is it even practicable? No, this is stupid. So there, when we calculate materiality, we decide it based on the common need. This user, we need a common need of all the users of financial statement. And when we determine the common need of the users of financial statement, we do it on the basis of certain assumptions. How many assumptions are there?
4.
4 assumptions. Please learn that. This is a very easy question, but I don't want you to mess up the answer. As per SA 320, the auditor's determination of materiality is a matter of professional judgment and is affected by the auditor's perception of financial information need of users of financial statement. Now you may ask, why are we writing this context again that is given in the question? Because ideally this is how you should be answering. But Niray, Pooja, everyone, Priya, Ronan, you have to observe your time and what is the status of time in the exam hall when you're writing this answer. If you are losing on time, don't write the context. But if you have enough time that you can write 2 lines context, use the question itself because this context is given in the question. And then your answer look very professional. So the judgment of time is important over there. Don't write the context everywhere. It will waste your time. So in this context, it is reasonable for auditor to assume. What assume? Assume that users have reasonable knowledge of business, economic activities, accounting, and they are willing to study financial statement with reasonable diligence. Your second assumption, users understand financial statement are prepared, presented, audited to the level of materiality. Third, users recognize uncertainties in measurement of amount of financial statement as they are based on estimates, judgment, and future events. Last, you will assume that users make reasonable economic decision on the basis of information in financial statement. Is this question conceptually clear to you guys?
Yes, ma'am.
That first, user should be able to make a reasonable economic decision. There are some crazy people out there in the world. In order to invest in a company and earn profit, they will sell their home and all. We are not considering those users into this, materiality. They are crazy people. They should be able to make reasonable economic decisions we are talking about, not the crazy decision. Second, they should be able to, users of financial statement should understand that there are some estimates involved, judgment involved. Some of the events are dependent on future events. For example, when you estimate the residual value of the asset, what does it mean by residual value? That after end of life of the fixed asset, you will be able to sell the remaining part, residual part, in for certain value. Now this is a future event. How do you give a certainty on that? So users should know that. Users should also know that the financial statement are prepared, presented, and audited at the level of materiality. What is material, right? What is immaterial? They have not given so much in detail. Otherwise, the financial statement will be of 200 pages. So what is material? They only show that on the face of the financial statement. Auditor also audit considering the materiality. Then they should also have a reasonable business economic accounting knowledge also, right? What is financial statement? What is balance sheet? What is P&L? Cool. Now comes easy question. Easy but important question. But before that, can you come to question number 49, guys? Materiality for the financial statement as a whole may need to be revised as a result of change in circumstances that occurred during the audit. Explain with the help of example. Can we change the materiality first of all? The answer is yes. We only said that materiality can be calculated throughout the audit, this and that. Why? Because you are allowed to revise the materiality. So there is a topic of revision in materiality as the audit progresses. What do you say? Essay 320. States that materiality for the financial statement as a whole may be revised as a result of Priya, can you tell me what are the 3 reasons because of which you will revise the materiality? Yeah. Nirai, will you cover this?
Reasons for revision in the materiality, ma'am.
Yeah.
Okay, I didn't see this topic, ma'am.
No, it is there. No, there are 3 reasons: change in circumstances. See in your concept book. In the beginning
Ma'am,
itself, you have this topic somewhere.
Oh, in the beginning, okay.
Sorry?
I went to last page, ma'am. That's all.
See, you will find it anyway. So the point is, you will change or revise your materiality due to change in circumstances that occurred during audit. Example, decision to dispose or liquidate a major part of business. Maybe you revise your materiality due to any new information obtained, or you revise the materiality due to change in auditors. These are all or. Change in auditors' understanding of entity and its operation when performing further audit procedure. Therefore, when auditor determines a lower materiality is appropriate for financial statement as a whole, he shall revise performance materiality and accordingly determine its effect on audit procedures. Done?
One
This is
minute
how,
last answer.
yeah, Niray.
1 minute last answer.
Okay.
Okay, ma'am.
Now, this is how your life proceeds when you do an audit, right? You first accept an engagement as per SA 210. This is not working. Now, while you do the audit, you have to comply with the requirement of SA 220 quality control. Then you plan the audit. While you plan the audit, you also identify and assess the risk of material misstatement, which you just did. Then you consider materiality at the same time for risk assessment procedure as well as the further audit procedure as per SA 330. SA 330 tells you that you have to perform further audit procedure to obtain evidences. SA 500 series and chapter 5 tells you how you should obtain the evidences. Yes, exactly. Pura entire 500 series tells you how to obtain the evidence. Then you obtain evidence regarding the material misstatements and you evaluate whether that misstatement is material or not in SA 450. Yes. Then you go ahead in life and you also consider before completion and review of audit, you also consider the requirement of SA 570, 580 and 560. But before you go into completion and review chapter 7 stage, while you were doing chapter 5 and chapter 4, that is, you are applying audit procedure, at any point of time you feel the materiality you have calculated before, initially at the planning stage is not working out to be good because entity's actual situation is far worse than what they have told in the beginning. You will revise your materiality. The moment you revise your materiality, you will be doubtful whether you have to revise your risk assessment. Maybe you may need to increase the nature, time, and extent of your further audit procedure as per SA 330, right? So this is a consequential process that you will have to follow. Yes. Once you're 100% sure that you have enough proof, either misstatement exists or doesn't exist, then you go ahead and complete the review and complete the audit. And then further you go ahead to 700 series and prepare your audit report. But before you do that, you also communicate with management and TCWG as per 260 and SA 265. This is your entire series. But the point is, whatever you're doing starting from SA 210 to SA 710, you will have to document it under chapter 6, audit documentation, whatever you do. Are we clear on the sequence in which practically your life will flow in your audit career? So please try to relate whenever they say, like, for example, you read this line that therefore, when the auditor determines a lower materiality is appropriate for financial statement as a whole, he shall revise the performance materiality and accordingly he will determine its effect on the audit procedures. So that means they are saying you will have to go back to SA 330, SA 315, I'd revise the risk, maybe revise the audit procedure. It will depend on the circumstances. Yes. Now, I want you to, I don't think I have more questions on the materiality, but the topic is not done yet. I want to take few more topics into this. Can I, guys? From the concept book, we'll do that. Where is this topic? Because this is a fairly simple standard, they can ask you anything around it. Sorry. How do I go back? Guys, how do I go back to previous page? I'm not that a tech savvy person. Okay, I'm here. What I wanted to do, I wanted to close this window. How do I? Okay, I think this is. Okay, now you come to essay 320. Materiality in planning and performing the audit. We didn't do a question regarding what is a performance materiality. But what is performance materiality? One materiality you calculate at the financial statement as a whole level, right? Maybe it may be 5 lakh rupees, it may be 10 lakh rupees, it may be 5,000 rupees, whatever. But then you come down and select a materiality which is lower than the materiality that you have calculated at financial statement. So for example, you said at financial statement level, my materiality is 10 lakh. But I don't want to increase my audit risk, so I will calculate my performance materiality to be 2 lakh rupees. So that your audit risk can be reduced to an acceptably low level. An amount or amount set by auditor at less than materiality for the financial statement as a whole, that means overall materiality you are reducing, probability that aggregate of uncorrected and undetected misstatement exceeds the materiality for financial statement level as a whole. Because you might think that you are thinking, you have a doubt that entity is preparing their financial statement in such a manner that you are going to see a lot of misstatement, and when you will make a sum of this, you feel that this value will increase the my overall materiality. So it is better you set a lower materiality for in the name of performance materiality. And if you find anything above this performance materiality, then you are like, no, entity, you correct all of this, otherwise I am going to give a negative opinion. Are we clear, guys? Now we did this topic that determination of materiality is a matter of professional judgment. Yes, but still you will assume certain things. We have already covered this question. Okay. Now, determining overall materiality and performance materiality. When establishing overall audit strategy, you only calculate materiality for the financial statement as a whole when you do chapter 300. But in specific circumstances, you determine materiality to be applied for particular COT, account balance, or disclosure for which misstatement of a lesser amount than the financial overall materiality could reasonably be expected to influence the economic decision of the user. So not 100% of the time you will calculate performance materiality. But if you feel that the lower level of materiality, lower than the overall materiality, may affect the users of economic decision, you please calculate a lower level of performance materiality as well. Now, this is the topic. I think we don't have a question on this, but it's important for your examiner. But before that, we covered this topic, revision as the audit progresses. We also covered materiality and audit risk topic. So there are two topics we are left with. One, your benchmarking, and second, your documentation. Now, before we do the benchmarking, can we do this topic documentation? So what will you document when it comes to 320? Whatever materiality you calculate at the financial statement level, whatever performance materiality you calculated. Any other materiality you calculated on the basis of any sales transaction, purchase transaction, or if there was any revision in your overall materiality and performance materiality? Yes? My question to you is, how do you determine materiality? So you need two elements now, guys. In order to calculate materiality, first you need a benchmark and you need a percentage. First because materiality is in terms of amount, right? So to calculate that amount, you will need a percentage and you will need a benchmark. What can be your benchmark? Your benchmark can be anything. It can be total asset, total liability, equity, revenue, expenses, anything. Right? So the question is, how do you choose? How do you choose what will be your benchmark? So there is a question that will be asked in your exam, and it's a very good question. Factors that may affect identification of appropriate benchmark include the following. Now, you guys have been really silent throughout the session. So I want Pooja to please read this topic and explain it to the class. I will give you everyone a minute to read this topic, and then you explain what are the factors for determining the materiality benchmark. Correct? Will we start? Go ahead, Pooja.
So the factors that would affect identifying of the appropriate benchmark includes 4 points, and the first would be nature of entity. For example, if the entity is emphasized more on debt rather than its equity, the users would obviously be
No,
would
but
obviously.
you are mixing the point. So in order to explain nature of entity, you are explaining how it is financed, no?
Yes, ma'am.
No, so in the nature of entity, you have to consider the factor where that entity is in its life cycle and the industry and economic environment. For example, I'll give you an example, right? Paytm is a company, right? It's a very very different kind of payment bank, Paytm, right? It's a very digital bank sort of a thing. Now, you will never see a Paytm making any profit, but you still see people investing in their shares. Why? Think. Because for users, profitability is not a need for them over there. They may be getting something else, and that is why they are still invested. So if you become the auditor of Paytm, do you really think you will choose profitability as the benchmark for calculating materiality? The answer is no. You will go asset wise. If you do an audit of Tata's group, which is a 50, 70, 80 years old company, then for that is established company, so you may choose for the total asset, the profitability, because their profitability shows a trend over a period of some years. Yes. So if you explain nature of entity in exam, you will have to explain how nature of entity affects your decision of making materiality. You have to see where that entity is in its life cycle, what is its industry and economic environment. Now, what point you were explaining is point 4. Now, can you continue?
Yeah. So what I said was it was with respect to what was the entity's ownership structure and the way it was financed. So if an entity is concentrated more on debt rather than its equity, the users would obviously emphasize more on the claims rather than on the entity's earnings.
And I'll give you an example. Like, for example, you go to bank for taking loan. What does bank do? Bank asks for security. What you give as a security? Your own assets. So if the entity is heavily financed by loan, you don't choose loan as a materiality. You choose assets, their current asset, the security they have given as a materiality. That is more logical. Are you understanding, Ronan? Yes? Then, okay, go ahead. Next, Pooja.
And the next one would be the elements of financial statement, like the assets, liabilities, equity, revenue, and expenses.
Correct. For my business, my assets and liability will look different. For other business, it will look different. So whatever entity you're auditing, accordingly, you go through their financial statement, then choose. Then next.
And the items where the user's attention of a particular entity's financial statement tend to be focused.
Yes. So for that particular entity, where exactly they are focusing, you have to choose that, right? Like for example, there is one company who is very good with their CSR activities. So I invest there in that entity only because they are very good with the, providing some value to the society. So I am looking for, and the company is also heavily investing in their CSR activities. So suddenly you see a company spending 200 crores in CSR, that may become the materiality. I'm just giving an example. It can be different things also. There, for example, a pharmaceutical company. Where exactly do you see pharmaceutical company making a lot of expenditure in their P&L? As a pharmaceutical company, where will they make the lot of expenditure?
In the production.
In their R&Ds. So R&D will be done. They will heavily invest on the components of the composition or the compound of the chemicals and everything. So a lot of to identify which treatment will work for what disease. So for those entities, you have to see their R&D or like properly or that R&D expenditure in their balance sheet, which is not written off, to determine what should be the materiality. Are you getting this, guys? Why we are saying that where the users will be more interested? Then the point 5 is relative
Volatility.
volatility of a benchmark. If you come and do the audit of my financials, and my revenue is 1 year I'm making 10 lakh, in another year I am making 1 CR, then I'm making another like amount. If the benchmark itself moving so much, do you really think you should choose that as a materiality? No. You need a stable benchmark. It should not be like, if you're taking other expenses, then other expenses are highly fluctuating. It will not help you, right? So you need a spade, because the stable benchmark will show okay how entity is working. So for the example of benchmark, you can pick PBT, total revenue, gross profit, total expenses, total equity, net assets value. Now there is also a concept. How do you, this is the benchmark is, we have completed benchmark. How do I calculate this percentage? Professional judgment. Determining the percentage to be applied to a chosen benchmark involves exercise of professional judgment. There is a relationship between the percentage and chosen benchmark. For example, you want to choose percentage as 10%, right? Now, the revenue is 50 crores. Total assets, it's 550 crores. Can you tell me what is the 10% of 50 crores and 550 crores? Now you tell me, how will you determine materiality for your client? 10% of revenue is 5 crores. 10% of total asset is 55. Can you keep 55 crores as a materiality for this entity? Right. First of all, the materiality should be somewhere between like 2% to 5% or 1% to 6% and all. But if you want to take total asset, total liability for calculating the materiality, you may choose a higher percentage. But when it comes to the revenue, you please keep it 1%, 2%, 3% only. So auditor may consider 5% of PBT from continuing operation to be appropriate for profit-oriented entity, 1% for the total revenue or total expenses to be applied. Because the profitability will be the small amount, but the revenue will be the higher amount. So for revenue, you can't calculate 5%. For the profitability, you could calculate 5%. No. For profitability, you calculate 5%. But if you want to take revenue as a benchmark, you calculate 1% over there. Otherwise, your audit risk will be very high. What do you feel? You have this topic in your books now, determination of percentage, guys. Now, I think I have covered everything that is important from the materiality point of view. Just have a look into your concept book again and see if you are able to understand the topics or not. I want to take essay 330 now. Can I? But I also want to take 5 minutes break. Is it possible? I'll just quickly go and grab a small bite to eat. I'm really, really hungry at this. I'm starving. And if you have not eaten, please you also eat. We'll meet at 2:35. Done, guys? Now, essay 330 is about, what is the full name of essay 330, guys?
Auditors' responses to assessed risk.
Auditors' responses to assessed risk. Where do you assess the risk? In essay 315. So whatever risk you have assessed so far, now we will respond to it. For responding to a risk, what do? We perform further audit procedure, because ultimately what is the goal? That you want to collect evidence. To collect evidence, right? Now, when you want to apply the further audit procedure, you have two ways of doing it as per SA 330. One, you perform test of controls, or you perform substantive audit procedure. When you perform substantive audit procedure, you have two ways of doing it. You do test of details. You do analytical procedures. Yes? Can you please draw a quick chart like this? If you already don't remember this, like, or maybe it is not there on the top of your head all the time. Now, come to question number 35, guys. Priya, can you read question number 35 for us, please?
XYZ Associates Chartered Accountants, while evaluating the operating effectiveness of internal controls, detects deviation from controls. In such a situation, state the specific inquiries to be made by an auditor to understand these materials, to understand these matters and their potential consequences.
Beautiful. Now, please understand why this question, how do you guess? Now, okay, now in the exam, how do you guess this question is from essay 330? All of you, can you tell me how does it help you identify? One,
Detecting the deviations from the control.
sorry,
Detecting the deviations from the control.
detecting deviations. How? Because you were evaluating operating effectiveness of internal control. Yes? And you are detecting misstatements. Just now we have studied that you have to test the controls under SA 330, right? As part of your further audit procedure. And because you tested the controls, you found that the controls are not as per your initial understanding. And in this situation, you shall make specific inquiries. Answer. As per SA 330, responses to assessed risks when deviations from controls upon which the auditor intends to rely are detected, the auditor shall make specific inquiries to understand the matter, to understand their potential consequences. The answer is like really easy, but in order to write the easy answer also, you need to understand from where this comes from, right? First, just a second. Unfortunately, in your standard itself, they have given it very half-heartedly. They have covered this topic. So instead of giving them giving them what specific inquiries you should make, they have given you that you should make specific inquiries and determine what you need to do next, right? So to understand the specific matter and to understand their potential consequences, and shall determine whether this is given in standard only like this. So don't worry that your marks will be cut or anything. Just remember that you should be able to determine that test of controls that have been performed provide an appropriate basis for reliance on test of control. Because if you found even if one deviation from control is identified, your immediate question will be, will I be able to rely on the rest of the test of controls that I have performed? Or do I need to consider the risk again? Or should I just ignore the test of control and should I just move to the test of details? Because if the controls are not effective only, then why should I spend my time over, checking all these controls, right? Then or you shall choose additional test of controls is necessary, or any potential risk of material misstatement needed to be addressed as a substantive procedure. Done, guys? Under your this topic, there is a topic under your essay 330, there is a topic of test of control, which says a higher level of assurance may be sought from the operating effectiveness of the control when approach adopted consistently consists primarily test of control. Explain and also state when will the auditor design and perform test of control to obtain sufficient appropriate audit evidence as to operating effectiveness of the relevant control. When should you perform test of control? Right? Answer: as per essay 330, auditor shall design and perform test of control to obtain sufficient and appropriate audit evidence as to the operating effectiveness of relevant controls when A, he expects that controls are operating effectively, or substantive procedures, that is desktop details and analytical procedure alone cannot provide sufficient and appropriate audit evidence at the assertion level. These are the only two reasons why you should perform test of controls. Now, this answer also expects you, if you go to this topic no, this answer also expects you to explain in the another para that auditor, when designing and performing test of control, shall perform other audit procedures in combination with inquiry, including you will ask or verify how controls were applied, the consistency with which they were applied. Guys, can you tell me who actually implements, design and maintain the internal controls? Guys, what did I ask? Who actually design, implement and maintain the internal controls in an entity?
Management.
Or what? It is the management with the oversight of TCWG, yes? If it is my organization, I will be the person responsible for designing, implementing the controls, not the auditor, right? So all you need to understand is how controls are applied, how consistently they are applied, and by whom in that organization and by what resources they are applied. Correct? There can be physical controls, there can be automated controls, manual controls, automated controls, right? It is there in this chapter. So please understand how these controls are applied. And please also ascertain whether controls to be tested are depending on other controls. So there will be some interrelated controls. For example, if you want to verify the controls at debtors level or trade receivable level, you will first have to go and understand the controls at the sales level, because the controls over the debtors will be always be dependent on how sales are recognized, whether there are any controls or not, right? So this is what the answer they would expect when they want to understand that auditor shall design and perform test of control to obtain sufficient and appropriate audit evidence regarding the operating effectiveness of internal control. So you will write when auditor should do that when he expects that control are operating effectively, because if you expect that controls are not operating effectively, why will you waste your time? Directly go and do the substantive procedure. Yes, Pooja? And when you feel that only by doing the analytical procedure and substantive audit procedures, like, test of detail, you will not be able to obtain sufficient appropriate audit evidence at a certain level. And that is why you should perform the test of control. Cool? Done with this point, guys? There is a question in your books, and it is a very logical question. Now, every year you are doing the audit from past 3 years. You must have also tested controls in the previous year. Yes? Can you use the evidences that you collected in previous year during your test of controls into current year? The answer is yes, you can. See, no entity. Do you really think in my organization I am going to change controls every year? No. Controls are determined for a certain level of processes. Unless and until that process change or that business activity change, controls don't change. Controls also depend on the size of the entity. If my business size is like 50 to 100 employees or 100 employees, near about 100 employees, I will have certain level of controls. Unless and until that 100 becomes 200 or 500, I am not going to change a lot of controls, right? Because changing controls is expensive. So for you to, why would you test controls all the time? See, you have to test the control, but you can also use the evidences that you have collected in the previous years. So the question here says, discuss the various points which auditor need to consider in determining whether it is appropriate to use audit evidence about operating effectiveness of controls obtained in previous audit. And if so, the length of the time period that may elapse before retesting. So what are the points you will need to consider while you use the test controls evidences that you obtained in the previous period and if previous audit? So that you can decide how much you have to retest and for what evidences you can rely on the previous audit controls only. How many points are there? At least you tell me this.
6.
So do
Points.
you think it is a good 5 to 6 marks question candidate? Very easily they can ask you this question from essay 330 if they wish to ask, right? Ronan, can you tell me the first point? How do I remember the first point? What happened? Ronan, do you have this topic in your concept book?
No, ma'am.
You don't have it?
No, I did not make any notes. I don't have any notes.
But you don't have ICI material?
No, ma'am, right now.
Are you in the library or what?
No, I have kept it inside. Take it.
Ronan, you are supposed to appear in the exam in few days. You need to have your concept book out. Please. Okay. Priya, can you cover first point?
The effectiveness of the internal control and how the entity monitors the internal control and the entity's risk assessment process.
Effectiveness of other element of internal control, including
The control environment
control environment, how entity monitors control,
and the entity's risk assessment process.
entities, RAP. How many of these points you have already covered in the component of internal control? Entities RAP, entities monitoring of control,
All the points.
control environment, right? So they are talking about the component of controls only. So you have to, when you have already done 315 and you have already seen all the components of internal control, then you decide now whether you want to test the controls based on your understanding or not, right? Nirai, can you cover the next point?
Risk arising from the characteristics of the control, including whether it is manual or automated.
Right? So for you to rely, whether you want to rely on the evidences obtained from the controls in previous year, you first see whether there are manual controls or automated controls. If there are manual control, what risk arise from those manual, like, what risk arise and what controls are implemented. If it is automated control, again, first see what is the risk arise and what is the control implemented, automated control implemented, right? Pooja, can you cover the third one?
Effectiveness of general IT controls.
How entities general IT control, effectiveness of general IT control. Now, without looking into your books, can you give me an example of general IT control, Pooja?
Access security.
Yeah, you have, why do you have the PIN code on your fingerprint and this and that and on your phone? Because you don't want your parents to access your phone, right? So this is a general IT control. That one employee's laptop should not be accessed by any other employee easily. I should not be sharing my password with anyone, obviously, for that. Without a proper ID, nobody should be able to enter the company's premises. So you have to see how effective are the general IT controls. Ronan, did you find the concept book now?
Yeah.
Okay, can you tell me the fourth one?
The effectiveness of the control and its application by the entity,
How
including
effective are effectiveness of control and its application by entity, including
the nature and extent of deviations.
nature and extent of deviation. So if you want to rely on the previous audit, like previous year's test of control, first see what kind of deviation you found last year. If you think a lot of deviations you found, do you really think that you should be using those evidences? The answer is no. Test the control again this year, right? Now this is a punishment to you, Ronan. Can you cover all last two as well?
Whether the lack of a change in the particular control poses a risk due to changing circumstances.
I'll give you example of this. Have you seen that hoarding of Tally ERP 9 Falana Dimkana on the road? Have you all? Near some cyber cafe, the computer shops in your main city market, Tally ERP 9 software, learn Tally ERP 9 or something like that. You know, Tally is a software, accounting software. It's a very much prevalent accounting software in anywhere in India, because like for small entities, they don't go for big softwares. But for example, there is an entity which changed their accounting software from Tally to SAP. SAP is worldwide very popular accounting software, right? What happened? You tested last time when you tested control, the entity had Tally as a software, accounting software. This year, they have changed it to the SAP as a software. But they did not change the controls. Then there is a risk because the software has changed. So that is why you say lack of change in a particular control poses risk due to change in circumstances. So the question we are studying is what points you have to keep in mind before you decide that you want to sorry, what did I say? I lost my change of thought. So the question here is, what point should you consider, right, when you decide whether you want to use the previous year's control testing? So if there is change in circumstance, but there is no change in control, do not use it because it will pose risk, right? That is what they said. And the last point is, Ronan?
The risk of material misstatement and the extent of reliance on control.
What is the risk of material misstatement this year and the extent you can rely on the control? You decide based on that. this year or last year, that how much you want to rely on those controls. Yes? Now, there is a question, how much you test the control? How much? The question is how much you should test the control. Can you all find this question in your books? How much you can test the controls? Or matters that auditor may consider in determining the extent of test of control. Ronan, how many points are there in that question? Ronan is like, why are you targeting me?
Extent on
How many points are there? There is a question which says matters to be considered in determining the extent of testing of controls. It will be in the beginning itself of essay 330. Do fast, I have to go to the gym. My trainer is waiting. I have been teaching since morning. Please.
2 points.
Are
5.
5. Yes?
Yeah.
Now this is your homework. So 2 things are homework. First, test of control. This question is homework. But then there is a substantive test of details and substantive audit procedures questions. These topics are homework. Try if you can make this question, like this particular question number 39 and 38 on your own. Right? Done? From tomorrow, can we do chapter 9? We will not take like a lot of time to do the chapter 9, maybe 2 days, 2.5 days maximum. Then we will have to go back to the other chapters, other important standards chapter. Done? Or maybe in between we pick the audit of bank. We finish all the difficult topics, chapter 3, chapter 9, chapter 10 mainly. And then we go back to standards and we do all the standards in a series. Will that work? Beautiful. Will you remind me tomorrow that I have to take audit of bank? Because I love standards on auditing. So at any point of time, I'll talk about standards on auditing, but I need to give attention to chapter 10 as well after your chapter 9, right? So whatever you can do from essay 330, you do, you finish at least your 315, 320 and 330 is done now, including entire internal controls. What is pending? There is a topic of evaluation of internal control. There is automated environment. Then there is a miscellaneous topic, digital audit. All of that is pending. We won't be able to finish that in next 2 days because there is no chance that we should spend so much time. This is not like a regular session itself, right? So let's try to pick whatever we can from chapter 9 from exam point of view, chapter 10, and then we go back to circling around the standards on auditing in remaining sessions. Who all have there are both groups now? Can you tell me? Pooja, you have, right? Anyone has both groups? No? What are you talking about? So can I extend your class? What happened? Zoom.
Okay, ma'am.
Yes, now you can.
I'll extend now. Otherwise, I was worried that I have to finish everything in 20 days, 20 days, 20 days.
No, it's fine. You can extend.
See, so you see, after my class, you get already time for study your costing and FMSM. Enough time do you have?
Yes, ma'am.
So can we do it
Yes, ma'am. Yes.
2nd, 3rd or 4th of May? Exam. When is
Okay, ma'am.
costing
Ninth,
exam?
it's from 9th.
It's from 9th? No. So then I will give you time from
9.
from 5th onwards. I will set you free. Thank God. So I will be
Okay, ma'am.
writing.
Okay, ma'am.
No, so I was worried that I may not be able to cover a lot of topics. So we will just go back to all the topics, but whatever we are left, we will at least take, from 1st of May to 5th of May to cover all those topics that we are leaving now. Thank you so
Okay, ma'am.
for saying that. Yeah, I was really worried that if even one of you have the both groups, then it will be very difficult for me to take the writing practice, like like after 1st of May actually. Perfect. Thank you so much for making my day.